Hey, I'm Sammy, and today I'm talking with Johnny K from Merlin. Hey, Johnny.
Hey, Sammy, how you doing? My name is Johnny Crypto with a K, and I'm wishing you guys all a great day. And I am the CEO of Merlin, the smartest way to track your crypto. We created the app to be able to help our users. We want to be able to help them track their crypto and also give them a way to exit.
Great to have you here. So I want to start asking you about the Clarity Act right now. So everyone's panicking about it being delayed. But when you think about it, in 1996, the Telecom Act also created chaos before the biggest bull run in history. So I'm wondering if we're just living through that exact window right now, or if you think it's totally different.
Well, I go to the old saying, history doesn't repeat, but it often rhymes. And I can't help but feel we are exactly in a very similar moment. In fact, I've been tooting that horn all along that I really feel we're waiting for the Clarity Act. If you look back to 1996, I know you were younger, maybe you're in diapers, who knows, I remember it. I was living there. We needed that Telecom Act that then unlocked, kind of set the rules. Back then, most people didn't know this, but it was illegal, literally illegal to innovate in the internet space. You would have gone to jail or you would have been fined because the telecom, right back then, the telephone industry was the big lobbyist, and they didn't want to lose that business, right? So they got Congress to pass laws earlier to say, hey, you can't innovate against us. Well, eventually in 96, when that Telecom Act came in and it said it's no longer illegal to innovate, now companies could innovate. And here we are today, you and I are talking on a live screen because of that decision made in 1996. But what it really did was it unlocked a flood of liquidity for companies to be able to invest in this space, because all the companies, technology-wise, they knew what was possible once it was allowable. And I can't help but feel exactly the same way with the Clarity Act. We have a crypto industry, a blockchain industry where it's being sued. The rules are unclear. We're using an old 1943 court law to try and dictate how it should be done on a technology that was developed 60 years later. It doesn't make any sense. But once we get the Clarity Act, and that's why I think there's a lot of frustration around or anxiety around when we're going to get it, I think it's going to unlock liquidity and bring a floodgate like we've never seen before, like we've seen back in 96, 97, 98, 99.
Wow, that sounds great. I mean, for all the moon boys out there, I like what I'm hearing. So that actually goes well into my next question. So if I'm understanding things right, which I'm not sure I am, but it seems like the bill has turned into a freeway fight with, on one side, the banks wanted to ban the stablecoins, yields to basically protect the deposits. Coinbase pulled support because, they need those yields and it's core to their business. And then we also have the Democrats that are trying to block it over Trump ethics concerns. So Bessent literally coined Coinbase recalcitrant actors on live TV. Like, what do you make of all of this here?
It's like whenever you try to do a new technology, you got the powers that be and the old money that have things at risk. And then you got new powers that be and new money at risk. And it's this battle. It's really this. It literally happened in 96, 97, right? You had the telecom industry that did not want this to happen until they were able to get seeded and be able to benefit from it. Right now, Verizon and all these other companies are now positioned to take advantage. And so I think the more they could slow the train down, the more the old financial institutions can say, hey, okay, how are we going to make sure we don't lose our empire? We want to have a piece of this new empire too. And that's what you're seeing. So at the end of the day, I think what's going to happen, all the parties are kind of, to some degree, I don't want to say at fault, but they have to all come to the table. And the reality is they're not all going to get what they want. We're going to end up with a bill that's, that makes both sides miserable. And that's usually the best bill you get. And neither side will be happy. But the reality is the crypto industry needs this more than the banking industry does. So I think that the crypto industry will have to capitulate a bit on it. But I do think we will get a bill. You have to understand, at the end of the day, banks are at risk. If their competitors are allowed to offer yields at 5-6%, and they're offering 1% or 0.5% or 10% in the bank, who's going to put their money in the bank? They're all going to figure it out. They go, I'm going to go to Coinbase, or I'm going to go to these other exchanges, and that threatens the banking industry because that's how they get their money. So I think that's really what's at play here. This big battle, again, shift for power. And until the banks figure out how they're going to get their hands on the crypto, they're going to be very, very strict on what they're willing to agree to. But I think the banks see the writing on the wall. They can't stop this train. It's left the station. Now it's just a matter of how much can they make the bill more in their favor versus the crypto industry favor. And I think that's where we'll see a healthy balance.
Wow, so fun. That actually reminds me a bit of the Big Short movie, 2008 crash, how the bank wouldn't You know how they were manipulating everything until they were able to enter short position themselves, and with the ratings and everything, like that was such a fucking drama. That was crazy.
Manipulation at its best, my friend.
Yeah. Next, I wanted to ask you about XRP. So, XRP holders, the XRP army, so they lived through years of the SEC calling it a security, the price getting crushed, the community holding on through all of it, and then the case got resolved, and regulatory clarity arrived. So, I'm wondering, is that basically the movie we're watching play out for the whole market right now with the Clarity Act?
You know, almost kind of similar but different, right? I mean, they actually went after XRP and sued them and really slowed them down, pushed them out of the US. They had to go and develop and innovate outside of the US to be able to spread their wings. With here, it's kind of similar in a sense where I feel like they're slowing the whole thing down. The whole industry now is being held back until we get the Clarity Act. The reality is big money institutions are not going to invest in this space until they know the rules of the road. And so to some degree, yes, but rather than doing it through the courts, they're doing it through the actual law or the act.
That's really a great point. And I think, I'm not sure that's really very clear for everyone listening to us, but it's all about liquidity. And it's all about the big players allowing them to properly enter with a proper framework and all their policies around that. It's not just like retail pushing the price, guys, I'm sorry to break it to you. But all of this is necessary for the next bull run, basically.
Yeah, pretty much. I mean, at the end of the day, to get the next bull run, in my opinion, bull runs are basically predicated on liquidity. Money coming in and money coming out. There has to be more money out in the market, and money will come and find itself into risk-on assets, right? But right now, when you've got if you have a tightening of the system or of the Fed liquidity, and if you or the banking system, and then if you have no law, no rules to lay this out. The only reason why I think the crypto industry has started to move forward a little bit is because they see the writing on the wall. When Trump won the election in 24, he came with a pro-crypto agenda, and he said it was going to be pro-crypto, and he put all pro-crypto people in place. The first time ever that we have a crypto czar. We've never had that in the history of our United States, 250 years, never had a crypto czar. We have now, for the first time ever, a pro-crypto chairman in the SEC. So he's putting all the right people in places. So I think companies are starting to lean forward. But to see the true money to come in to launch the next bull run, I think it's going to happen after the Clarity Act. And not right after, like, Clarity Act passes today and the money comes in tomorrow. That's what everybody's going to expect. That did not happen in 96. The Telecom Act came to 96. Companies then needed 6 to 9 months to go through the bill, to understand the laws, understand how they're going to navigate the space. And once they're able to do that, then I think we'll start to see the money coming in.
Got you. What do you think could break the current stalemate right now? Do you think Trump could be forcing it before the midterms, or like smart money starting to pressure the Senate, or what kind of outcomes do you see right now to move forward?
It's a great question. I actually think both. I think Trump has a pro-crypto agenda. Trump takes pride in being able to say, I made America the crypto capital of the world. There's no doubt he wants to say that. And he doesn't want China to do it. And the only way to do it is to get that Clarity Act done. And if he doesn't get it done by the midterms, most presidents usually lose the midterm election. So he knows he's going to lose it, most likely, if you just look at the statistics and the odds in the past. Or probability. So he's better off getting it done. So I think he is pushing very hard, because he does recognize if we don't get this done in the next 2-3 months, we may never see it. Because if he loses, then it ain't going to get done in his end of his term. And then the next president may not be a pro-crypto friendly president. So the stakes are extremely high, in my opinion, right now. If we don't get this now, we may not get this until we get another pro-crypto president. That could be 4-8 years from now. Who knows?
Going back to smart money, for our audience, what does acting like smart money actually looks like when, let's say, you're a retail investor with 10K? Like, I'm really interested in not just theory, but real moves. So when you set that up, what does actually tracking looks like day to day? You're watching the charts obsessively. Do you have a system in place to remove all of that?
Well, smart money, listen, smart money is always going to get in when retail money's out. All right. So whenever you see the fear and greed index very low, or before anything even takes off, that's when smart money is coming in, because it knows where those technologies are, what it believes are the technologies that are going to ultimately drive the future. Retail money kind of comes in later when it hears that smart money got in, but it's always too late. Retail always gets it wrong, because the way the game is set up is smart money gets in first, then the big institution money gets in second, Then they start touting it on TV. Everybody starts hearing about it. And then retail comes in and drives it all up. And so I think that we're going to see that very same thing again. And that's why you talked about exit strategy. You talked about how do you get in and out. And that's why we created Merlin. It's why we created the app, is we know that smart money is going to come in, the retail money is going to come and drive it up. But if you have a exit plan, you have a chance of taking profit before you end up becoming what I call a rubbernecker, where you watch your account go all the way up and then you watch it come all the way down. And I'm a rubbernecker. I've done it many times. That's why we invented the app. Not doing that no more.
Yeah, I mean, I just called that. I never heard that term. I just called that round trips. And let's just say that I've been around the world a few times myself with them round trips.
You call them round trips, I call them rubbernecking, but it's still the same thing, right?
Same.
Yeah.
You talk about having an exit plan before you actually buy. So not when everything is mooning. So can you walk me through what it looks like?
Yes.
Do you write alerts? Do you use alerts or write it down?
It's a great question. So whenever I buy a position into anything, I always say to somebody, look, when you go on a trip, on a vacation, do you plan a one-way or you plan a round trip to come back home? You know when you're coming, you know when you're going. When you're getting in, you're getting out, right? Well, it's the same thing when you buy an asset. You should know when you get in, you should know when you're getting out. But if you ask most people, hey, what price are you going to sell? They have no clue. They're just waiting to get rich. They're going to wait till it goes up. I'm like, what? Yeah, I'm just waiting for it to go up. To what? They don't even know. And that's a problem. And that's what we solved here with Merlin. We created a tool. Not only is it an asset tracker where you bring all your coins in one place so you can see them, but we also created a exit strategy tool. And we just beefed it up with a new feature now called an exit strategy builder feature in our pro package, which automatically helps create the exit targets for you based on the range that you select. So you literally have to select 2 points on a chart and boom, it'll create your exit strategy for you, the targets, I should say. And then you can go ahead and that will automatically set up alerts. So now you have a plan. Now you have exit targets. Now you may not hit them all, but that's the whole point. We're trying to retrain people to understand, don't ever try to catch the top, because guess what? You won't. Only like 0.1% of people catch the top because it's up there so short and it comes down. And the same thing at the bottom. Everybody tries to catch the bottom. Guess what? You won't. I don't try. If I catch 80% towards the top and 80% towards the bottom, I'm happy. And you'll make a lot of money doing that.
Wow, great lesson. I feel like people, as you said, just expect it to just go up, always go up. To where? To the moon? You don't know. Like, just keep on going up. And then when it's the time comes to actually sell, I'm talking from my own position too, from my own experience. You feel like you have to sell everything, or it's everything or nothing. You don't have a tiered exit strategy, and then you learn bit by bit, okay, to actually take profit a little bit there, and then let the rest ride. And I feel like this is something that's really missing today in the education space. People talk about crypto, the technology and everything, but how to actually make money out of it, take profit, and having a proper strategy is something that I haven't really seen enough in the space.
That's exactly right. And that's why we invented Merlin. We are one of the few trackers in the world that actually has an exit strategy. We are trying to educate people that, listen, an exit strategy, by the way, doesn't mean you sell everything. Don't be like me. In 97, I bought Amazon. I bought 1,000 shares, $17. Like an idiot, I sold it all at $27. Now that was half my salary in 1997. So I made half my, if you made half your salary in 3 months, you might sell it all too, right? I was so happy. But what I didn't realize back then was I needed a plan. I needed to only sell 40, 50% and hold another maybe 30, 40, 50% for the future in case it kept going up. And that's what everybody's worried about. Everybody's worried about fear of missing out, FOMO, right? So because they're worried about missing out, they actually miss out because they don't sell it all. I did just the opposite. I sold it all. The real answer is somewhere in the middle, where you sell some on the way up, and then you hold some for the future in case it keeps going up. And if it comes down, well, you don't care because you took profit. So that's what I call schmuck insurance. Always hold on to a little bit.
I love that. And you can also use a trailing stop on the way down, at some levels if you want to. So I really love this approach. And as a trader that trades, with leverage features, I love being long and short at the same time, not from the same levels, obviously, and take profit quickly and let my positions run and then let the market decide, at the end of the day. Okay, so right now we're in a bear market. I think that's quite obvious. Like we're down 50% from a BTC all-time high, more or less. In terms of this year, are there specific levels or signals that you look at, or is it purely time-based? And once you set those levels, How do you make sure you actually stick to them when the market is screaming you to panic?
Well, so for me, I look at the fibs all the time. The Fibonacci levels are very, very pretty accurate. Most traders use them in the world. It's a sequence that's been used for hundreds of years, thousands of years actually, and it's pretty reliable. It's not perfect. There's nothing that's going to predict, like there's no crystal ball in the market. But when I see it coming down to certain fib levels on the downside, I'll start picking some up. But I DCA in, right? So I ladder as it's going down. I call it laddering in. I ladder in a little bit. So let's say you said $10,000 earlier. If I had 10,000 and I see it drop down one fib level, I'm not going to put all 10,000 in right there. I might buy one or two. And then I wait to see if it comes a little further down. If it does, maybe I go 3 or 4 more in. And if it comes a little bit further down, I'll buy some more. If it doesn't, I just hold. I keep the money on the side. I wait. If it goes back up and hits a couple of those fib levels, I'm going to take some profits and come back out again. But what I'm not going to do is try to catch the bottom because I don't know where the bottom is. And that means I'm going to, you know how many times I've missed a target by like 4 cents or 5 cents or 3 cents? No, I don't do that no more. You know, if my buy, fib says it's $1.91 and it's at $1.94, I'm going to buy. I don't care about 3 cents because I believe the upside potential is way higher than the downside potential.
No, that's great information. To add something on top of that from my own experience with fib levels, what works quite well with Bitcoin is really the golden pocket to 786 retracement. So 618 to 786. And for altcoins, they tend to retrace way deeper. I tend to look at more the 786 to the 886, or 885. So just keep that in mind. If you're not trading Bitcoin, you might want to be more cautious with your approach too.
Yep, absolutely.
I'm thinking that most people watching this right now, they're probably sitting on losses or they missed the last run. What's one honest conversation they need to have with themselves before the next run comes?
So 2 things they should do if they're sitting on losses. Most people will sell and get out. But if you have conviction and you believe what you're in, you should be buying more. You should actually be doubling down. Warren Buffett, one of the most famous investors in the world, always said, buy when there's blood in the streets. Buy when you feel like puking, right? And a lot of times that's what I'll do. When it doesn't feel right, that's when I've retrained my brain now to buy when it's low. And that's hard for people to do, right? They want to buy when it's going up and they end up selling when it's going down. It's just the opposite. You want to buy when it's going down. You want to buy when it doesn't feel good. But people won't because they're afraid like, if I buy here, it may keep going down more. Yeah. But if you follow what I just told you, that's the plan. You buy a little bit here and then you buy a little bit more. I want it to go down more because I'm going to buy more as it goes down. Because sooner or later, it's going to hit a bottom and then it's going to turn back up again. And that's what I'm looking for. So that would be my advice to them is 1, don't be afraid to buy on the way down to lower your average. And 2, make sure you have an exit plan. So when it goes up the next time, don't be afraid to take some profits.
Awesome. I would add on this, maybe consider proper risk management. Some people tend to go all in, on one project or one thing, so maybe diversify, make sure the position is not too big in comparison to the other ones. And what you said with, buying the top kind of resonated with what happened with the heavy metals recently with gold. I was doing some TA on gold and I found that the point of control where you have the most exchange of gold, like the most, people selling the most and buying the most too, was at the top actually. So basically you had smart money exiting at the top and you had retail buying the top at the same time.
There you go.
Exactly what you just said.
That's how it works, my friend. That's how the game is set up. If you don't know the game, you're going to get played.
Most people, I think they think of a tool like Merlin more like for bull markets, knowing when to sell, taking profits and not getting greedy. But we're kind of in the opposite environment right now. So how does the way you actually use it change when you're accumulating rather than exiting?
Yeah, that's a great question. So what's great about having Merlin is it really is a tool to bring all your coins to one place. You can actually see what your portfolio looks like. Most people don't know what their portfolio is doing because they got on average 5 wallets or exchanges. So imagine that you got to go check 5 different places to be able to see what your portfolio is worth. And then, by the way, some have the average price, some don't have the average price. So you don't even know what you're making or losing on each one. We try to solve all of that. So with Merlin, you can see them all in one place. You can get a sense for what your whole entire portfolio is doing, and then you can make better decisions on when to enter into something. If you know your average price is $1.37, Now you have the data you need to say, oh, okay, well, right now we're at 96 cents. You know what? Maybe I should pick some more up because we're on the way down. But if you don't know what your average price is because you're in 4 different areas and they don't even show you your average prices in wallets most of the times, it's a guessing game. And what you don't want to be playing a guessing game with your money.
Wow, I love that. I wish I heard that 5 years ago. Next, I wanted to ask you about some hot topic right now, the new Fed chair. So everyone's panicked when Warsh got nominated, Bitcoin dumped. But it's personally called Bitcoin the new gold, especially if you're under 40. So I'm wondering, is the market kind of misreading him? Or is he more hawkish? Or is more hawkish Fed generally a problem for digital assets?
Well, I mean, listen, it's always hard to predict those things. The market's always going to, the market gets nervous around hawkish type Fed, Fed chairman because of the fact that hawkish typically means risk off. And so you won't see as much money coming in if we're tightening, right? I think Warsh is trying to do it a little different. And he is pro crypto. So I think that'll help a little bit, be more open-minded to maybe someday the Fed may be leveraging a digital asset for a potential banking coin. Who knows? We'll see where they go with that. But I know, Powell was always kind of against it, always said, no, we're staying away from blockchains. But we may see a different attitude now under Warsh.
Wow, man, you have no idea how much I can't wait to watch the new FOMC meeting and interview after, because I've been watching them for years, waiting for the Powell speech. It's always the same thing. So I'm like, at least something's going to change. They literally reuse the same words,
I know. It's literally the same.
So historically, digital assets, they've ridden the money printing wave. You just talked about that, like quantitative risk on versus risk off. So see if that wave slow down, what changes in how you actually invest?
I mean, if they're going to slow it down, that's going to obviously slow the markets down. And so those are the time periods where I look like, okay, this is where things are going to get tight. Things are going to drop down. And that's where I'm ready on the side to be able to pick some up. That's where I'm going to DCA in. I'm going to go more into a buy mode mentally than a sell mode. I'm not going to think that, I'll still have my exit plan set up, but I'm going to be looking more, how can I continue to buy? Whenever I got a little extra disposable income, I'm going to definitely try to put it there in those time periods. Versus if we're growing and the markets are booming, I'm not going to be buying much on the way up. I want to be selling.
That's the whole difference there. And
yeah, it's
I'm planning to accumulate this year too. I'm trying to be a bit patient, wait to drop under 200 EMA and reach a better support, probably in the 40s. But I think this year is definitely the year to accumulate before the next crazy run. And I feel like people right now think kind of digital assets, they're dead. And this is exactly in those kind of moments that you're making your money.
Yeah, exactly right. No, you're exactly right.
Some analysts think that Warsh will just do what Trump wants, keep rates low regardless of his reputation. Do you buy that yourself?
The Fed chairs usually tend to operate independently of the president. So we know Powell has gone completely opposite of what Trump wants. I think Warsh should be, and it's funny, Trump actually appointed Powell. So it's not like they're, so yeah, I mean, it certainly could where I don't know if he's going to, follow what Trump wants. Trump you can't fire a Fed chairman. The president can select them, but you really can't fire them unless they do certain things. There's a very, very finite number of ways a president can remove a Fed chairman. So once you pick one, he's kind of in there for the next 6 years, unless he resigns. And so I think they say what they want until they get selected, and when they're in, like, okay, I'm going to do what I want now. And so I don't think he's going to do what Trump wants. Trump wants lowered rates, and a hawkish guy. I just find it hard to believe the hawkish guy is going to come in and lower rates, wildly like the way Trump wants to. But who knows? We'll have to wait and see. Trump picked him, so he must know something we don't know.
Maybe he has some kind of leverage. I don't know. Maybe you see him record a video like Powell, the hostage video. When I received the letter, they're coming after me.
Yeah, maybe he's got some pictures somewhere. Who knows?
Awesome, man. I really appreciate your answer there. And for the last question, those are more like rapid fire questions if you want to answer them quickly. So, diamond hands, discipline or coping mechanism?
That's very interesting. I'm more of a hodler, right? The diamond hands kind of, I'm holding, but only until I get to my exit targets, and then I'm out, So that's really the key is if I have conviction in an investment, if I bought a coin, that means I had conviction in it. And unless something fundamentally changes, I'm going to kind of hold it and diamond hand it until, again, my targets are reached. So that's kind of where I'm at.
I love that. I wish I heard that also 5 years ago. I remember like hopping from trains to trains and the next shiny object, and then you leave the project, and then it starts moving after you leave it. And just stick to something that you really trust. And I know it's not easy with digital assets to be 100% confident, but maybe don't select meme coins as your first investment.
Yeah, definitely don't select meme coins for your first investment. Don't do that. You probably won't be in crypto too long if you do that.
So what's one number you check before price?
One of the things I always like to look at is the number of coins available. So I'll look for the total supply, and I want to see if there's a max supply. So the number I look for is a max supply. If there's a max supply on the token, then that's already check. That's a check mark that I like. Because if there isn't, then it's no different than the US dollar. It's like fiat. You can just print more coin. Exactly. You just make more digital coins. And then what does that do? Why is that bad? For the common man who doesn't know, because the more coins you add to the supply, the lower the price comes of the coin. If it's limited and you can only make like Bitcoin 21 million or XRP 100 billion, you can't ever add another token. So that means whatever the price is, once all the tokens are released, is always going to be the price. And of course, it can move up and down, but it can't get diluted further by adding new tokens. So that's the number one thing I look for, is max supply, to see if the token has one or not.
Yeah, for me, that's one of the number one flag to assess if it's a shitcoin or not, like the US dollar.
Yeah. I can't even argue with you. They're like, he's not American, so that's why he's pissing up. But the reality is, we even kill the US dollar because it is a shitcoin.
It's dead. It's going to zero.
Yeah, it is, right? Did you know that every single fiat currency that disconnected from gold always goes to zero?
Always goes to zero. It makes sense when you think about it. It just seems absurd. When you think about it properly, it doesn't make sense, though.
Yeah, that's right.
So next, we're sitting in extreme fear right now, with Bitcoin down 50% after, we reach all-time lows actually for the fear and greed index. So historically, is this where you accumulate or you wait for more pain?
Oh, no, that's accumulate. That's 100%. I mean, that's what I look for. The fear and greed index. If I look at that and I look at the fibs and I see if we're sitting on a support level and we're at the fear. Remember, the fear and greed index represents sentiment of the people. Retail is what drives the market pricing up and down. Because the big boys aren't buying on retail. They buy on the OTC. They buy on the dark pools. They're buying behind the scenes. So they're not moving the price up and down, right? So when you see retail sentiment at an all-time low, that is absolutely a great indicator, in my opinion. Not financial advice, we're not financial advisors, but that is a great time to buy. I love DCing when we're down in the 5s and 10 ranges, and you don't get them that often, but when you do, they're great opportunities to buy, in my opinion.
Same. And I love what you said about finding confluence. So it's great to have the fear and greed, but if you can find fib levels too, previous all-time high, like some strong levels that you can also add as confluence, that's even better in my opinion. And always remember to DCA. It's not because you see a fear and greed index at like 5 that you're going to go all in on anything. Of course not.
Exactly.
What's the biggest mistake retail makes at the top of a bull run?
And you know the answer to that one. They don't sell. You know what happens when it's at 10? Everybody on TV is talking about going to 20, right? So they're never going to sell. Retail won't sell. Retail will always make the mistake at the top, because as they see it going up, they think, again, FOMO is the biggest mistake they're going to make. The fear of missing out is why they're going to miss out, and that's again what we solve for. Is now with Merlin, you're going to get an alert. You have to stick to the plan. You sell when you get your alerts, and now you took some profit here, take some profit here, you take some profit here. You take it on the way up. That's the way to do it, but that's not what retail is going to do. Retail is going to hold, and then they're going to watch it come crashing all the way back down.
Yeah, and then you're going to see everyone on TV, needing the exit liquidity. So they're going to start chilling Bitcoin to 1 million by the end of the year. And this is where everyone gets wrecked. Correct.
Absolutely. That's what, like I said, if it's at 50, they're telling you it's 100, going to go to 100. If it's 100, they're going to tell you 200. They're always going to, $1 million, they're going to tell you 2 million. They're always going to kind of make you think they need you to stay in the game.
Of course, it's different this time. Well, think about it. There's Michael Saylor. It's so different. I'm like,
bingo. See that? You could be on TV. You should go on CNN.
Let's go. Last question I have for you. If someone's starting from zero today, what's one strategy to follow?
You know, if you're starting a strategy, I like to look at what are the assets. I like to have diversification in this industry, and I look at kind of where are the segments that this industry is going to really take off. And we all know, we've heard from Larry Fink over and over again, tokenization of the world is coming. They're going to digitize, blockchain is going to digitize everything. So for me, I would start in the real world asset category. I'd go on CoinMarketCap or CoinGecko and look in there and see what are the top 10 or 20 assets in the real world asset tokenization bucket. And that's, for me, would be a starting place where I would consider that one in AI. I think both of those are going to be the big plays.
Let's follow up on AI. I wanted to ask you if you think it's maybe overhyped, or if there is like proper.
No. I don't think it's overhyped. I think AI is going to change the world as well. Both of them are going to be. We're just at the very beginning of AI, my friend. We're just getting started. So for me, I want exposure to the categories that I think are going to be big. So it's the payment financial system, you know, like XRP, XLM, those kind of plays, HBAR, right? Then I want exposure to real world assets. I want exposure to AI, big data. I want exposure to that. I want exposure to gaming and interoperability. So those are like the 5 sectors I look for to make sure I've got some exposure in those areas.
Wow. I think I'm going to write that down.
I'll go watch the video over again.
Well, Johnny, that was lovely. Thank you so much for all this information. Again, Merlin, check out Merlin, guys. It allows you to properly track your portfolio and create an exit plan. So you don't just follow your feelings, the FOMO. You actually know what you're doing and you're taking profit on the way up and not following retail traders. So check out Merlin. Also check out Johnny K's content on Twitter. I think you're quite active there, right?
Yeah, we have a Twitter channel at Johnny Crypto. We also have our YouTube channel for Merlin where you can watch helpful videos. And then we also have a show called the Good Evening Crypto Show on YouTube where you can find me as well. We're always sharing content about the crypto market.
Awesome, man. Thank you. I'll see you on the moon then.
Absolutely. Sounds good. Thank you, Sammy.
Bye.